Hi there everyone, good afternoon and welcome to this edition of Closing Trades right here on ET. Now I'm Aman Dabash, with me Nikunj Dalmia, and well, you can't say full steam going because the equity markets have definitely tempered off. We've cooled off, no sharp corrections, but remember, 2 straight days of a rally is what we witnessed. Yesterday, a particularly ferocious one. Nonetheless, for now, we're hovering around the 24,180 mark. You've got the broader markets, though, in comparison to the frontliners, I think they seem to be on a bit of their own trajectory, especially the mid-cap end of the market, which remains very undeterred by what's happening with the frontliners and holding out by nearly 1% or so at a time like this. You've got sectors like IT, which are leading the way. Media is in the green. FMCG as well seems to be holding out. And on the flip side, auto, pharma, energy, those are some of the sectors that are taking a bit of the back seat. Just let's check in on some of the top movers. Britannia, Asian Paints, Infi, Wipro, Titan, IndusInd Bank, HCL Technologies, and then Reliance Industries as well contributing. So that continues to remain in the spotlight. Adani group of stocks, though, continue to remain rather subdued in trade today, with Adani Enterprises being the top loser. For Nikunj, just going by the kind of texture that we have in the market right now, of course, we did see 2 days of a terrific run up, but I guess consolidation doesn't mean that the undertone of the market is not bullish.
Aman, it's a good solid 1,000-point rally from Thursday's low, and it's come on back of short covering and then the outcome of Maharashtra elections. Frankly, mathematically, we can talk about sentiment, we can talk about what it means for the medium-term outlook. Mathematically, because of the Maharashtra state election outcome, nothing changes for FY25. And FY25 is where markets are grappling with slowdown. That, this quarter, next quarter, will government spending come back? What will be the impact? What texture it comes back? So the outcome of Maharashtra election is unlikely to have impact on that. So that is something which we must recognize. On the other side, which is on the global side, the dollar strength continues unabated. FI selling continues. Yesterday's data was that MSCI adjustment, you take that out, the number was not very impressive. So you don't have a situation where the bulls have got everything for them. But yes, a market which was oversold, which was delicately poised in terms of finding no takers at lower levels, now seems to be finding some, some semblance. I think that December would be a good month, and I'll tell you why. Because election is over, bulk of the election, India, US state election. Bulk of the earning adjustment, I think, is over. October, it started off bad. October was terrible, and November, the fall-off was not there. FI selling towards the year end technically should fade out. They go on long year end holidays. And then in terms of IPOs, you don't have any large IPOs like you, for example, had a Swiggy, you had a Bajaj Housing Finance, you had a Wari. No large IPOs are planned. So net December is going to be bereft of news flow. And when a market is bereft of news flow, technicals and mood point, it takes over. And the mood point is certainly not SAR. It is not strong, but it is not certainly SAR. Devin Choksi, good afternoon, sir. I thought you were traveling.
Yes, Nikunj, good afternoon. Tell me.
You've gone on a holiday and look at what has happened to Adani group of stocks.
I know. I think things have actually started working a little better. And again, I think market punctured the entire rally. Anyway.
Do you think there is value in these stocks? If you think there is value in this stock, why?
I think the more fundamental viewpoint out here that each of the assets, be it the power generating, power transmission assets, or renewable assets, or for that matter, road infrastructure assets, or airport infrastructure, or data center infrastructure assets, each of these assets are basically generating cash for the companies under which they are operating, and it is at a group as a whole. If I look at the summarized view of the group, financial year 25-26, 85,000 crore kind of an EBITDA, on which 20% kind of a growth is being seen over next 2 years, 3 years time. So frankly, I think these assets are cash generating assets, against which I think the total debt of the group, if one looks at 2,40,000 crores, I think this is easily met, I think, through the cash generation that the group is making. So from a perspective of looking at margin of safety, I don't think that I think there is as much risk involved in this particular assets. Yes, one could argue that what if they don't get the growth capital, but that is a speculation that one would not like to enter into till the point of time allegation is proved against them. So from that perspective, I would like to give a benefit of doubt to the group wherein we believe that I think the current financials of the group, they suggest that I think the valuation wise, the margin of safety comfort is much more higher than it was ever before.
So what would you buy? Adani Port, where cash flows are predictable. Adani Green, which has fallen because of the controversy, because one is safe, another one is hit by news.
Yeah, I think if Adani Green probably has fallen, maybe I think it's more because of the nervousness. It's more because of I think the issues pertaining to I think they're getting the future funding for the business. In my viewpoint, as I believe that I think the at this point of time, I think one should not be getting too much into that speculation. And if at all, I think one wants to basically get some affirmation. I believe that I think there are so many companies which have been charged for a similar kind of a cause in the global market, be it in USA or be it in Europe. I think they continue to remain leaders in their business. They continue to be in business. So I think probably India is experiencing this particular situation for the first time. And that's where I think some amount of nervousness definitely is justified. I agree. But at the same time, I think nothing is closed chapter. I guess I think the investors will soon discover that I think the allegation, even if it is proved, then also I think there is a business situation to run this entire operation. So I think one should not be getting into any kind of conclusion at this hour as I see it.
Kunal are also ready. Viresh, a monster comeback from Thursday's low and a solid consolidation this afternoon. Is everything going as per the script?
Yeah, so what we are seeing is the initial 2 days was the Nifty taking the lead, and today, after that, heavyweights taking a lead, it is mid caps and small caps. So if you look at it, we are up 0.5 to 0.8% on the mid cap, small cap indices, even though the Nifty is flat for the day. So overall, the bias remains we go towards that 24,500, 600 mark and then review whether we see a breakout in the banking space. So would we be watching out for price points 24,500 on the bank on the Nifty and 50 to 500 on the bank Nifty. So that remains the resistance. But the bounce is going as on expected lines, and it remains a buy on dips closer to 24,100 odd levels on the Nifty.
Kunal, as per the script, big comeback, you make a base and then climb up again.
Yeah, I couldn't have asked for more, Nikunj, frankly, especially after 8 weeks of consistent price selling, yesterday's FI numbers, today's consolidation, pick up in large cap names, and I think that's the interesting bit of the market today, because you've seen many of the large cap stocks in the last many weeks have seen starts, but those starts have not resulted into any kind of a major follow through up move. But today seems to be one of the days where you're seeing very mild pullbacks on the indices, very mild pullbacks on the few names which have rallied up in the last couple of days. But then there are new breakout candidates. So I was looking at the list of stocks which are trading now above their 200 moving averages. For example, last week or so, midweek, we were discussing this point that almost 85 to 90% of the stocks in the mid cap 50, small cap 50, and few of the indices like the Nifty 50, I think had seen almost 85 to 90% of the stocks below their 50 and their 100 moving averages. That number has reduced substantially, and now we are at a point where almost 50% of the stocks are just about trading below those averages. So it's been a very good recovery for the indices, and till the time these numbers keep on improving for the overall market, the texture of the markets would remain positive, and these mild consolidations should be taken as a buying opportunity.
Are we in for a good December? What we call is that the Santa rally, some like to call it the Christmas rally. Are we in for a big one?
Yeah, it looks like. I think the start of the December series should be on a positive note. Yesterday was one of the first days which we saw the rollover data, and it's very encouraging because almost 12 lakh contracts were unwound for the Bank Nifty for the current series, but just 1 lakh was transferred to the next series, which means that there was a net reduction of almost 10 to 11 lakhs in terms of OI. So that means that the extent of short covering which has happened to the banking index is playing effect, and we've seen historically that whenever the indices going into an expiry week after 7-8 weeks of price correction and with a change of stance from the traders, it has a strong effect going into the fresh series.
Okay, fair enough. That's the word coming in on the Nifty Bank. Meantime, just checking in on some interesting volume buzzers in trade. Some on the back of news. You've got a Vodafone Idea, of course, that's active in trade today. It's been positive news and thereabouts double-digit gains, 8.5% nearly. There's Yes Bank as well. That's another volume buzzer. So that stock too is holding out. Within the FMCG basket, check in on a Colgate Palmolive. Don't flag that one off as a volume gainer too often, but this one makes it to the list. Pretty strong volumes is what you're seeing. Macrotech developers, the entire real estate basket is holding out, but this one particularly stands out in terms of volumes. And then there's a Bajaj Auto as well that's seeing pretty strong traction on the volume side. A quick check-in then, Naresh, from you. Any of these stocks that are looking interesting?
So Bajaj Auto is something which I would be watching out for, given that the stock has corrected a lot and come back to the same prices where it was back in March, April, which is where it started a fresh move from. So closer to that 9,000 mark is an interesting place, 9,000 to 8,800, where one could look out for a buying opportunity for a bounce back to 10,000 odd levels.
All right, tell you what, we'll take a very quick break right here on the show. 24,215. Be right back with lots more market analysis.
The newsmaker, of course, is Zomato. They've raised 8,500 crore. The stock bottomed out when the funds were selling stocks worth 8,000 crore. So Devin Bhai, the stock bottomed out when the same funds who participated sold Zomato, and today they are buying fresh QIP worth 8,500 crore. And typically when a stock moves into FNO, when it moves into the index and when supply comes in, the stock tends to peak out. So do you think in the near term we have a glass ceiling in for Zomato and it will take some time before it cracks it?
Yeah, well, I believe that I think on a total market cap in above, I think 2,50,000 crores, I think the company has been producing annualized profit of around 1,500 crores, then a little above. Even if one assumes that I think they keep producing this growth in profit at about 100%, given the kind of strength of business model that they have, still you are basically paying a significantly large amount of premium to buy an asset, which is going to give you a larger amount of, I think, the visibility about the business. Agreed that they are in a growth-oriented business. Consumer tech is very powerful out there. But at the same time, I think the valuation at which I think they are trading currently, probably in my mind, I think everything is fully priced into this particular valuation. So unless we get some corrective downside in the market, which is significant and protects our downside on the lens margin of safety, probably not immediately convincing to buy the assets, I think, at a significantly large premium, which is what at Zomato currently trading at.
Okay, that's the take coming in. Meantime, Devin, what's the outlook on where you stand when it comes to real estate? Stocks like Macrotech are buzzing away in trade. With this election, we're also talking about a lot of focus on execution and momentum picking up when it comes to project wins. How are you reading into real estate?
Well, again, I think there is no doubt about the growth in the real estate space, and particularly the premium real estate or housing is something which is going to be in demand given the strength of the wealth that we are now experiencing, particularly in the larger metros like Mumbai. And that's where probably some of the premium developers are stationed at. I believe that I think they will continue to enjoy the kind of a growth in the business going forward. At least the current visibility is between 3 to 5 years for most of these developers. So from that perspective, no questions, or that it's not denied that I think these companies are going to see a larger growth. Whether the valuation is attractive enough, maybe answer is no. Maybe everything is priced in at this point of time. Answer is yes. Probably, I think one would like to buy when the market gives you a sharp correction on a given day. If at all it happens, that would be, I think, a better time and opportunity to add some of the good quality real estate names in the portfolio.
We are up marginally from the day's low. Again, that's what you want to see. You want markets to go higher, make a base, stay there, go up and down, and then recover as things close. Naresh, this is like they say textbook stuff, right?
So classical in that sense, we've recovered sharply and we'll take a pause for a few sessions, paid off the move, the gap gets tested. So we have a gap around that 24,000 odd levels to 24,130. So testing that today also we made a low exactly around those area. So in that sense, we consolidate here and then look at 24,500. And if we sustain about 24,500, 600, it gets into the first indication of a stronger bounce. because that would imply the recent swing high has been taken out. So for now, expecting this to continue, but stock-specific action could get better and better over the next few sessions.
Okay, meantime, the entire defense basket, as well as on JP Morgan's radar, they've initiated an overweight on BEL. Hindustan Aeronautics is a stock that they like. They're also talking about Mazgaon Dock with a target price at 42.48, saying that there's a long runway for structural growth and that the recent correction as well that we've seen in the stock price is an opportunity. Which would be your preferred pick, Devain, when it comes to defense?
Well, we continue to like the underlying story in each of the companies which are talking about, and whether it is BEL or BML, I think the individual verticals on the defense definitely I think remains a very strong proposition. Whether you are getting enough amount of comfort again with the valuation, answer is no. Largely because of the fact that I think these companies would have a gradual delivery against the order book that they have. It's not going to be an exponential kind of a delivery solutions that I think these companies produced. So from that perspective, if I think the 20% kind of a CAGR growth over next 3 years is assured, then probably I think the valuations around 30, 35 times price earning would be I think a comfortable valuation. Anything over and above that, I would think that I think would be an expensive valuation to buy into the portfolio. So I think definitely initial correction which happened in the last month and the current month beginning in some of the defense names, they gave a good amount of clarity that yes, I think if they do come down, it's a buy opportunity. If they firm up again, I think one will have to wait before buying into the portfolio.
Okay. Devin, which is one stock which you think has been unnecessarily punished because of liquidity? The fundamentals are not that bad. It's falling because FIs are selling.
Not too sure about, I think, the names that I would like to put across, but I believe in general, some of the some of the rich valued stocks, I think in the mid cap and the small caps, I think they have been significantly punished. Whether I think they are justified for that particular thing, I'm not too sure because I think individual names we are not talking at this point of time. Um, in the large cap space, yes, I think that I think the likes of Reliance probably I think has been punished I think much more than what probably I think is the business and the valuation of the company is. In my viewpoint, I think maybe due to some sharp exit of some of the large investors, the company like Reliance has corrected significantly. It becomes an opportunity. I think this kind of corrections definitely becomes an opportunity, as also one has seen in yesterday's trading. I think the good amount of buying has also happened on that counter. So similarly, there are certain banking stocks, some of the NBFC stocks like Bajaj Finance or Bajaj Finserv, who remain, I think, relatively stronger on the execution side of the business. They are probably, I think, down because of other reasons. So in my viewpoint, I think they pose or they give an opportunity at current levels to buy them into the portfolios.
Even where is Geo Financials headed? You know, it had really made a stunning debut, went without on hopes and on assumptions that it could be a grand start to Geo Financial Services business, but they've not really done too much in terms of getting business activity rolling. Where is Geo Financial Services headed?
So I guess I think the vertical wise, if you look at, I think each of the four verticals in Geo Financial Services, I think they look definitely clear cut as far as I think the execution is concerned. On one side, NBFC vertical, asset management vertical with the BlackRock, even the distribution of wealth products, including the brokerage platform with BlackRock, and insurance vertical where they are looking at some tie-ups of the partners. They are all probably, I think, getting ready. On one side, you have the balance sheet size, which is strong enough in starting the lending business. On other side, you have technology platform in the reach to customers, I think, which can possibly, I think, help you in starting the business at a faster pace. Maybe as the style of Reliance is, I think they build the infrastructure very systematically. After which, I think they roll out the model, and in subsequent period of which, after which they rolled out, probably the numbers taken, and that's what one has experienced in case of Geo Platform. Similar situation is expected to happen in case of GeoFinance, wherein I think one after another business are getting rolled out with the use of the fintech at the front and I think a strong balance sheet at the back. Probably I think they would be in a far better position to talk about as far as the number is concerned in due course of time in subsequent quarters.
Okay, meantime, let's just get in some chart checks as well. And Kunal, what's your reading on something like a Granules India on the charts? Have you had a look at Biocon as well?
Yeah, Biocon is something which I have been tracking regularly. The stock, it looks attractive. So I think after that result-based move, the stock moved towards 340-50 levels. Then from there, it corrected back towards 325, 330 mark. And now it's back again to those 350 levels as a breakout. So which means that this corrective move of 20 odd rupees is completed for Biocon. And the stock is getting ready for a breakout yet again on the upside. So I think on the upside, we could be looking at least a 20 to 40 pointer move for Biocon from this 350 levels. So which means 370 to 390 could be a potential breakout point for or the upside target for Biocon over the very short term. Granules on the other hand is also I think trying to look very inch back towards a breakout. It's looking attractive on the charts because there was a false breakdown for the stock. So in the last 2-3 months the stock had retested levels of 540, 530 3 or 4 times, and in the fourth attempt the stock had broken below those 540 levels. But it was just for a matter of couple of days and the stock has managed to make a comeback again. So which means that we could now be looking at the stock gaining a lot of momentum over here. So I think closer to 600 would look out for targets in the range of 640 for Granules.
All right. Meantime, Deven, wonder if you've been tracking what's going on in the quick commerce space. UBS's latest report talks about how Swiggy has a bit of an edge and it's well positioned for growth, given that it's at a 35% discount to Zomato. What's your take on the listed players?
See, I think about the quick commerce space, I think we like the entire proposition because the way in which they are executing, they are also factoring in significantly large amount of customers and the volume on into their side. So I think whether you take Zomato's model or you take Swiggy's model, I think both these models have some niche to talk about for sure. The question here is, and as I explained earlier in the case of explaining Zomato, I guess I think the question is the valuations. The market is probably priced in everything at this point of time, including the possibility of charging the user fee by the Swiggy's and the Zomatos, and that to at a higher proportion level. Probably everything is getting priced in, and the valuations are really remaining, I think, at an elevated point. So that is a concern. I think unless you have a safety margin of safety on the downside, probably I think you are not easy to buy this kind of company. One is not easy to buy this company into the portfolio for a reason that I think it might give a prolonged underperformance if at all certain conditions are not met. So that's why we are a little bit more careful, want to buy with the margin of safety and not otherwise.
Deven, going to let you go on that note. Thanks so much for taking time out and joining in and sharing with us your take on the markets. We'll slip into a very quick break then, but before that, let's get in those closing trade ideas from our chartists. Kunal?
So Biocon is something which is looking attractive. The stock closing above the 350 levels today after almost few weeks of consolidation. So would look out for targets in the range of 370. That's a stock which I'd be bullish on.
Biocon it is. What about you, Naresh?
So that would be buy on Birlasoft. The stock has corrected from 850 to 550 odd levels. In the last 2 sessions has made a bottoming out formation, expecting this to continue.
All right, there you have it. Those are your top closing trades. We'll slip into a quick break. Be right back.
Varun Sabu joins us, Head of Equities with Anand Rathi. Let's take a conversation forward. Varun, good to have you on ET now. What do you make of the market? Are we in for a prolonged period of consolidation, or the worst is gone and we should now prepare ourselves for a major uptick?
Yeah, hi, thanks, Ibinav, and thanks for inviting us on the show. So I really don't think so that this consolidation will continue for long. The only reason why we went through a phase which was a little difficult for the markets in the last 1.5 months was because of the FI flows being quite negative. Obviously, it's very difficult to take a call on that. We don't take a call on liquidity, how that's going to shape up going forward. One thing we need to understand that in case the FII flows have to continue also from here. So currently they have sold above about around 1,30,000, 1,40,000 crores. In case they have to sell some more also, luckily our domestics have enough wherewithal to stand the same, right? So I don't see any material downsides in the market surely in case of FII flows have to be negative. But once their funnel stops, I think there could be a sharp reversal and markets could do extremely well. What's supporting the markets is the strong fundamentals that our companies are going through. We are seeing demand trajectory being strong across sectors. We recently hosted our conference in Mumbai. We had about 185 plus companies which had attended the conference. We had 8 marquee speakers over there. And it was, it was across that we were hearing that demand pattern remains very strong. Businesses are doing extremely well, be it any sector, be it hotels, be it textiles, retail, be it cement. I mean, we are hearing very good bites. The only 1 quarter blip, which was the last quarter, was more so because of because that being a quarter where you had excess rainfall, floods were there. It was also a quarter where we were just coming out of elections. So that was the jerk which the market saw in between. But I think that was just a blip, and we should see sharp reversals going forward.
But in general, numbers have disappointed. We've hardly seen any upgrades. What makes you confident that things could look up? Because for things to look up, economy has to pick up, credit offtake has to pick up, jobs have to pick up. Nothing has happened.
Absolutely. So it was just a 1 quarter blip, as I mentioned to you. If you remove this quarter, for the last 3 years, I think in a row, our EPS has only seen upgrades across. It has not seen downgrades. And also for this year, I think we should wait it out for the entire year, financial year, to get over to see how the upgrades and downgrades would look like. If we have to take in cognizance that this is an election year. You had this last couple of quarters going through that, and if we see the government spends which happened, that was down about 35% in Q1. That recovered to about 15% negative till about 6 months. And now what we understand that things should start picking up on that front materially. And if this covers up, which we are quite confident of, that things should start reversing materially over there, I don't see any challenge going forward. And in terms of earnings, I see a major pickup coming in the third and fourth quarter.
And where do you see the reversal happening? I mean, will it be capex? Will it be consumers?
So we are very optimistic about all-round pickup. So capex, definitely, as I mentioned to you, government capex will start picking up. If we talk about private capex, if we saw L&T's order booking, it was clearly showing that capex has picked up. They surprised majorly on the order booking which was there. If we hear ABB's last con call commentary, they clearly called it out in their commentary that they're seeing private capex picking up. So both government and private capex would start shooting up going forward. It's obvious that most company balance sheets in our country today are delevered. So we are, and most companies are coming and raising money also. We have seen companies across coming and raising money. We have been seeing so many such issuances which have happened in the last 6 months. So companies are flush with cash. Things are going very strong on the ground. So there's no reason why you would not see capex picking up. So that is number one. Second, in terms of consumption, we are already hearing companies across coming and giving have called it out that rural has picked up. In the last result commentary, across companies spoke. In our conference, most of the companies were mentioning the same, that rural has picked up and is going very strong in terms of consumption. So clearly consumption is picking up in the interiors of India. There has been a little bit of urban slowdown, which was spoken about in the last quarter. As I mentioned to you, I am seeing it as a quarter's blip. In our conference, again, companies were speaking about things have picked up there as well again. So it was just a blip is what we are calling it out. I think you're going to see an all-round pickup in terms of sectors.
Let's get in a sense from you as well as to what the outlook is on heavyweights like Reliance Industries, for instance. It has been through a phase of consolidation. Retail has been fairly decent, but the sustained recovery has failed to follow through. What's the outlook when it comes to Jio and the risk reward for RIL?
See, honestly, again, if we have to talk about stock performance, it's been more because of the FII flows, as I've been mentioning. You look at any company, forget Reliance alone. I mean, you look at the Autopack, Mahindra and Mahindra, or names like Eicher, etc. They all have, despite doing quite well, despite numbers coming out to be very strong, they all have seen stock prices either consolidating or correcting. So it has got nothing to do in the last 1.5 months stock price reaction versus how the companies are doing. I think Jio is doing very well. I don't see any reason why that should be linked to the kind of stock price performance we've seen. So don't see any change there. We have seen telecom ARPUs only going up across telecom space. Things have been well. So I don't see any challenge. Retail is picking up materially in most companies that we had at our conference. The commentary on retail was very strong, that retail has started picking up materially. So I'm very hopeful Reliance could also start reversing. Just let the flows slow down a little in terms of the negative flows from the FII side, and you'll see a sharp reversal there.
Okay, that's the view coming in on some of those individual stocks. Meantime, just checking in as to what the Nifty 500 is throwing up, and what's bucking the general trend is, of course, those Adani group of stocks. So there's Adani Green, Adani Energy, Adani Enterprises, and ports that are under a bit of pressure. But that aside, names like a Fortis Healthcare are down in trade. Lupin is a bit soft in the trading session, ditto with an Ipca Labs. Kunal, your take on some of these pharma names?
So I think it could just be an off day for many of the pharma stocks, because I was looking at the pharma index, in fact, in the last couple of days, and they've come back very close to their respective 20-day moving average as a breakout. Now there are very strong exceptions towards the pharma pack. You look at Divi's Lab, I think it's almost been like 8 or 9 consecutive weeks or months rather, where the stock has given consistent price performance. Sun Pharma was one of the other stocks which have done reasonably well. That stock, however, has corrected I think 200 points in the last 2 months of the price correction. But Lupin, I think, is one of the strongest chart from the entire pharma pack. I think this correction should be bottomed for Lupin. Ipca Labs also looks very attractive. So my sense is that the pharma pack overall looks quite attractive. There could be few exceptions, few odd charts which may underperform the entire sector. But then I think when you're looking at this as a large cap play, I believe that one should stay invested.
Okay, meantime, speaking of the pharma space, let's hear it out from HDFC AMC's Chirag Setalvad, and he believes that pharma players are well positioned to benefit from industry-related tailwinds, saying that they remain overweight on the space, but will be looking at select stocks. Listen in.
Those who are India focused, there are those who are generic focused, there are those who are somewhere in between, there are those who are concentrated, research oriented, and so on and so forth. So you have to get very, very stock specific. But I think the good news is that the environment is somewhat fertile, in the sense that domestic pharma is growing 7-8% without volume growth. So if volume growth comes back, then that's a little bit on top. Hospitals are growing reasonably well, occupancies are high, and US generic price declines are easing. So what used to be 7-8-10% is now coming to 2-3-4%. So overall, the environment is reasonably positive, and that creates the opportunity for more ideas. But you have to drill down to a company-specific level, and when we do that, we find a lot of well-run companies, and hence we are overweight on pharma, but it's stock-specific.
Nuresh, pharma has shown traction. TV is a success story. Loris is turning out to be a success story. In general, pharma has had a good run. Where do you think this rally will extend itself in 2025? Which are the stocks which you think have potential to yet give a double-digit return from these levels?
So the names which have generally not performed in the last whole rally. So first one is Loris, which has gone sideways for the last 3 years. In the last 2 sessions, it has broken out. Same way, you look at Biocon, the stock has gone nowhere for the longest period. It's at the same price where it was in 2018. Has been making a higher base around 300. Then you look at Syngene, very interesting. The stock did not correct much in the fall and is now back to the prices of 900, 920. All-time highs are around 950. The previous highs in 2023 was around 850. So I think there could be a shift in terms of leadership. This could be names which have not performed before, could take leadership going forward. So as of now, these are the 3 names which come on my radar.
Varun, pharma is still growing in single digits, 7-8%. So I wonder, what is the excitement all about?
So there's a lot of excitement, what we see around this entire Biosecure Act, which is going to be there. So when we talk about these names which have been doing well, be it Divi's, be it Syngene, be it all of these names, they have been doing very well around that. So the entire thesis is getting based around China plus one. I think this entire CDMO space could look very good going forward as well. Till the time that is in place, plus with Donald Trump coming, the conviction around the same goes even higher. So I think all of these names will do well, including Loris Labs and also. I don't see a reason why this rally shouldn't continue.
On Adani group of stocks, are you looking at adding more? What is your view on Adani group of stocks?
See, I think this entire correction which happened. I don't want to. Obviously, I'm no judge to this. I can't be really talking about what has happened around this entire thing. But it's just that I want to just let audience of ET Now know that in the past also we have seen the same thing when Hindenburg came out and spoke all those things around the company. They came out with a complete clean sheet, and they proved every single bit that they were clean. Again, it's from the US that we are seeing these kind of allegations coming, and which seem to be quite baseless. I don't know. I mean, as I said, I'm no judge to it. So I think this is a good time when one could look at these names. They're some great names. They have great assets. Adani Ports is one of the best companies, best assets in the country today. You have ACC Ambuja's. They are eventually they're going to be the second largest or probably the largest cement company in the country. So I don't see any reason why one has to not buy these companies in this correction. There has been a lot of noise from US around these names. I don't see any merit to it, basis how the history has proven it wrong.
66 points higher for the Nifty from the day's low. We are consolidating steadily. Naresh, at what point in time you would say Adani group of stocks are now looking reasonable? It is time to start buying them again, because if history is anything to go by, in 2002, 2003, if you bought these stocks, you were handsomely rewarded.
So it's a tough section of stocks to analyze purely on technicals, because we've seen wild moves all through. So out here, if you look at, say, Adani Enterprises, that's the one which sees the wildest move. But relatively, the only name which comes in the radar to buy on dips on whenever such news happen is Adani Ports, because that has the maximum institutional ownership. So on declines, Adani Ports remains the best. And if you look at other names, the way they've corrected Adani Total Gas from 4,000 to 600, I think it is back to 2021 prices. So we've seen a massive correction in the other names. So there are two plays only, one where volatility is still digestible. One is Adani Ports, and next would be, say, Adani Enterprises.
Okay, let's get those BTST trades going from our charters then. And Kunal, what's on your radar?
So I'll go with Wipro as a buy. The stock looking attractive. IT index is one of the better performing indices. Wipro is one of the stocks which is inching towards a breakout, close to that 575, 580 plus mark. So would look out for targets in the range of 615, stop loss at 570. And Piramal Enterprise has done exceptionally well. The stock today has done, given a strong breakout on the monthly and the quarterly chart. So this could be a very strong trending move for Piramal Enterprise. Buy with a target of 1300, stop loss at 1140.
Okay. Naresh, let's get in your BTST trade.
So first would be a buy on Birlasoft. The stock has seen a correction, and now we are seeing a recovery after multiple bottoms on the low end. Expecting a move towards 610 on BTST, stop loss at 590. Second would be a buy on ABFRL, which is bouncing from the same 290, 300 support. Stop loss at 303, target price of 315.
Kunal, just been one of those hot and cold stocks, right? Lot of expectations, no delivery, ABFRL. Everyone thought Birla stocks would start coming up. I also thought that they were doing all the right things, but suddenly they've lost their way.
Yeah, they lost their way in between, but I still believe that these are very strong stocks, Nikunj. And I look at it over a span of the last 2 years. ABFRL was, I think, closer to 175, 180 in 2022 mid 23 start. From there, the stock moved up to almost 350 levels, and from 350, it's come back into the 300 level. So, which means we've looked at a 100% recovery or a rally for ABFRL. And then from 100% rally, the stock has corrected 20% broadly, more or less in line with the overall mid-cap theme over the last 8-9 weeks of the market correction. But now I think at 300 levels, it looks fairly attractive back again. So which means that the stock has ended this corrective phase, completed a mean reversion, and I think at 300 levels, I would be looking out for targets at least in the range of 350 back again for ABFRL over the medium term, say over the next 3 months or so.
Varun, what is your big trade for 2025? I mean, every year we get 1 or 2 trades. For example, quick commerce has been a great trade this year. Defense was a great trade for 2024. Railways was a fantastic trade for 2023. What's the trade for 2025, Varun?
So aspirational theme is the biggest trade for me in the country today. If you see upgrading happening across everywhere we're going on, that people are upgrading. I think the biggest play here is Eicher Motors. Keep an eye on it. I think not only for 2025, but from here for the next 3 to 5 years, that's going to be the biggest play in my view. One has to keep in mind that's the only pure play, aspirational play in the auto space, and it's just starting to perform. So we have seen numbers for the last monthly numbers coming strong. We are hearing very strong bites across dealership networks where we keep doing channel checks around. And one has to keep in mind that people shifted from 100 to 125cc, from 125 to 150cc, and the next is above 150, and where Eicher Motors is king. And Royal Enfield is the biggest brand. There can be competition coming in, but nothing beats the brand which is there. So very bullish on Eicher Motors and the aspirational theme overall.
Okay, that's the view coming in. Let's also understand what the outlook is when it comes to the entire IT basket. How have you, Varun, read into the quarterly earnings? What have been some of the red flags? I know you're talking about how it's a one-off. Does that apply to IT as well? And what is it that you're expecting by way of commentary and quarterly earnings from the IT sector?
See, IT going forward is going to be completely dependent upon how US is going to shape up. Luckily, with Donald Trump winning and we seeing that, I could only see IT spends going up going forward. So if you have to take a longer term view, another 12 to 24 months, there's clear-cut thought process where IT should do very well. Now, the only thing which can be a dampener in between is that yields have strengthened. So the entire thesis which was getting built around interest rate cuts to happen, that could change. So when it comes to valuations, the DCF-based valuations could provide some stopping to the upsides which could have been there in the space. So I would probably believe that IT could consolidate from here. I don't see any material upsides in the next 6 to 12 months. But yeah, fundamentally, I don't see any change. Things should remain strong over 2 to 3 years there.
All right, there you have it. That's the take coming in on the IT basket. Naresh, let's get in some views on how you're looking at the tech leadership that we're seeing in trade today.
So we've seen almost a new 52-week high on the Nifty IT index. We've started seeing names which are consolidating for a long time breakouts, and that Wipro comes top of the place. Tech Mahindra is another which has started coming back. And many of these names are still lower than what they were in 2021. So focusing on names which have not really performed after 2021 and lower. Same way of Birla Sort, which is down 25% from the top, looks interesting. So the whole basket, the leadership has been HCL Tech in the large cap space. Infosys and TCS have also started making a move, but I would go with names like Tech Mahindra, Wipro, Birla Soft, or even a LTMIT.
Okay, there you have it. That's a take coming in on the entire IT basket. Meantime, just looking at the overall movers in trade today, and on the upside, there's Piramal Enterprises as well, which has scaled up a solid 8.2%. New India Assurance, another winner. It's a 5% gain on that stock. Biocon, one of Kunal's recommendations, is doing quite well today. There's Colgate-Palmolive India, which on the back of pretty strong volumes as well as a mover in trade. Berger Paints, Britannia, Jubilant Food and Asian Paints as well are some of the other gainers within this sector. Other than that, there is a PNB, ABB India, United Spirits as well that are holding out quite comfortably in trade. Varun, would there be any sectors that you would be a bit cautious on that you believe have already seen quite a heady run up, and hence would you be a little bit cautious on the space?
I don't think so. Anything has run up recently. So there has been good correction for the last 1.5 months across sectors. But yeah, I would not be excited on the consumption sector overall. I'm talking about staples particularly. We have seen for the last 4 or 5 years that people have tried to time rural pickup, and then every time there has been a hope that things would start picking up. But one has to understand these are saturated categories, and that's the challenge here. So I don't see anything changing going forward. They are extremely well penetrated across the country. So growth will never be too sharp. So I think these will come off in their valuations. Obviously, valuations have come off from 60, 65 times that they were trading at to now about 40, 45 times. I don't see a reason why it can expand from here. I think it can contract further down to 30, 35 times. And that's where I see the challenge. So consumption, probably if it will not correct, will consolidate. Otherwise, I'm pretty bullish across sectors. The two themes which I really like, I've mentioned about aspirational theme, and the other one is the capex story, where I see a sharp pickup in capex with continuity in government and the outlook around it also.
All right, Varun, I'm going to let you go on that note. Thanks, Kunal and Naresh as well for joining in. Let's have Snehi then wrap up the markets for us. Snehi.
Absolutely. It's been a rather lackluster trading day for us because we started initially on a strong footing. We opened around those 24,300, 340 levels rather, but we've slipped quite significantly from the day's highest point, 24,195. So even sub the 24,200 mark is where the Nifty is right now. 0.1% cut coming on that front. Sensex managing to somehow hold on to those 80,000 marks by the skin of its teeth, but 1/10 of a cut coming in on Sensex as well. If you take a look at the broader markets, however, it's been outperforming the benchmark today since the get-go. Nifty mid-cap rather flat, but if you take a look at Nifty small-cap, that continues its second day of gains. Yesterday also it was up 2%, so an outperformer there, and today also continues to hold up pretty smartly, 0.8% jump coming in on that front. Advance decline ratio slightly in the favor of the advances today, so not much positivity on that front. India Wix has remained flat, however, so that is something that's something that we're not worrying about at the moment. If you take a look at some of the sectors that are some of the stocks that have done well for the Nifty today, Shriram Finance, Britannia, Asian Paints, BEL, Infosys, these are your top gainers in today's trade. However, what is not done well and what's building pressure on the Nifty pack today is the entire Adani group of stocks after the Fitch rating outlook that has come. Adani Enterprises, Ports, Ultratech Cement, Bajaj Auto, Sun Pharma, M&M, Trent, NTPC, all of them trading with cuts of more than 1% in today's trade. If you quickly take a look at some of the sectoral gainers and losers in today's trade, it's been IT through and through today. That's been the real winner. In fact, it's overtaken FMCG also. FMCG is one of the top sectoral winners in today's trade, but IT has outperformed FMCG right now. Both of those counters doing pretty well. And from the IT pack, you have the likes of Infosys, LTI, Mindtree, Wipro, TCS, Tech Mahindra, Persistence. It's also the large caps as well as the mid cap IT names that have participated in this rally today. Very good moves coming in for the IT pack. If you take a look at FMCG, also the likes of Godrej Consumers, Dabur, Tata Consumers, HUL, Radico, of course HUL being in focus for the demerger of its ice cream business. The board has also given a nod for that. So that is also something that's led the consumption pack to be in focus today. What's not done well, however, Nifty Auto has been in the slow lane ever since the get-go today. More than 1% of cut coming in for Nifty Auto as well. But marking out some individual gainers and losers in today's trade. Angel won the last couple of minutes. We're getting this news flow and a sharp spike coming in on the stock towards the end. 5% higher is where that stock is on the back of this a mutual fund certification that they've won from SEBI. LT Foods is forayed into Saudi Arabia, so that stock is done well. Zomato on the back of the offer price that they have said. Also a couple of brokerage notes keeping Zomato in focus. KEI Industries on the back of their QIP plan that we're hearing about. Ashoka Buildcon on the back of an auto win. New India Assurance on the back of a tax refund coming in, so that stock also held up pretty smartly. Also on the back of some brokerage action, then Swiggy was in focus on the back of a UBS note. Real estate stocks, the likes of Lodha, Godrej Properties and DLF on the back of a Jefferies note, and Colgate on the back of another Jefferies note as well. So top pick coming in for Jefferies in the consumption space being Colgate. So that stock also held up pretty smartly, 4% gain coming in on Colgate. But well, yes, to sum it up, this is how we've ended today's trading session. Failed to manage to hold on to those 24,200 levels, a 0.1% cut coming in on the Nifty 50 today.
If you like this video, then like, share and subscribe to ET Now.